This is your LMAX Exchange technical update for Wednesday, January 18th, 2017. Eurodollar. So the euro continues to extend its corrective gains, and it's important to say corrective because despite the impressive gains overall, the downtrend here still remains firmly intact while the market trades below that December peak at 108.75. We certainly could breach that 108.75 peak, but until we breach that peak, the risk is still for a lower top ahead of a bearish resumption, potentially back towards that 14-year low that we saw recently at 103.41. Sterling dollar. So an impressive, violent reversal to the upside in the pound in Tuesday trade, and this could suggest that the market is in the process of looking to establish a major base. However, at the same time, the market continues to be trading within a longer-term downtrend, and ultimately, we would need to see a break all the way back above 127.96 to really take the pressure off the downside. Initial resistance comes in around 121 in the 124.33 area, and a close above there could open the door for a more significant push higher. But right now, we are seeing the possibility of some form of a major base in this market. Dollar yen. So dollar yen continues to extend its correction and is now coming close to some key previous resistance turn support in the 111.45 area. At this point, though, any additional setbacks below that level should be limited in favor of what should be the next higher low and fresh upside extension back towards and above those recent multi-day highs at 118.67. Euro Swiss. Euro Swiss has been consolidating and not really going anywhere, but the overall trend here favors the downside, and the market should gravitate back towards a retest of that 2016 low at 106.24 further down. Aussie dollar. So Aussie has now taken out some key resistance at 75.25, and this does warn of the possibility of some more upside. But again, even though we've seen that break of 75.25, the market, you can see here, is coming into some really good internal resistance and could very well easily stall out now, especially after seeing such impressive gains over the past several days. Look for the market to see if it can hold above 75 on a close basis in Wednesday trade. If it can't, then that could warn of a potential reversal back to the downside. Dollar CAD. So dollar CAD has come all the way down towards 130, with the market potentially threatening a break of this psychological barrier, but it would take a close below 130 to really suggest that we're seeing a more significant structural shift. Until then, there is risk for another bounce and eventually gains all the way back towards those recent highs that we saw up around 136. Kiwi dollar. Kiwi has seen a nice correction along with the rest of the currency market over the past several days, but here, if you look at this chart going back to the 2016 high, it continues to look like we could be topping out, with the market just seeing a correction in favor of that next lower top and fresh downside extension. SPX 500. The S&P 500 is consolidating just off its recent record high. It would take a break back below some support that we saw going back to the 30th of December around 22.32 to take the immediate pressure off the top side. Gold. So gold continues to extend its impressive run, with the market wanting to put in a longer-term base after being supported in the 1122 area and ahead of in the 1120 area and ahead of 1100. At this point, the establishment back above 1200 is a very constructive sign and could continue to set the stage for the market's fresh upside back towards a retest of the 2016 high at 1375.